Welcome back to Investing Talk Podcast.
Today we're looking at critical metals.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. When you first look at critical metals, you have to understand it's not really a normal mining story.
Right. This is much more of a strategic, almost a national security play that just happens to involve a mine.
Exactly. The whole story, the entire value proposition, it all rests on one single asset, the Tanbreeze deposit up in Greenland.
And what makes that specific deposit so special? I mean, there are lots of mines in the world.
Well, it's about two things, scale and specificity. First, the scale is just immense. It's one of the largest rare earth deposits on the planet.
Okay, so it's big.
It's huge. But what's really, the game changer is the specific mix of minerals they have. We're not just talking about standard rare earths.
You mean the stuff that goes into magnets and phones?
Some of that, yes. Like they found cerium dioxide at really high concentrations, around 1,711 parts per million. But the real story, the geopolitical angle, comes from the other stuff, the critical strategic minerals.
Okay, so break that down. What are we talking about here?
We're talking about things like niobium, hafnium, and gallium. The 2024 drilling results were, frankly, pretty staggering.
Right, I saw those numbers. Niobium pentoxide up to 1,746 parts per million. That seems incredibly high.
It is, and hafnium was up to 484, gallium around a 103 ppm. And you have to understand what these are for.
This isn't just commodity-grade stuff.
Not at all. Niobium is absolutely essential for high-performance superalloys. Think jet engines, rocket components, things that need to withstand extreme heat.
Okay, so defense and aerospace. What about hafnium?
Similar high-heat applications, but also critical for things like supercapacitors, even control rods in the nuclear industry. This is high-spec, advanced tech material.
And this is where the geopolitical moat comes in. Because right now, where does the world get this stuff?
That's the crux of it. For decades, China has controlled over 90% of the global rare earth supply chain. Processing, refining, everything.
A single point of failure for basically every advanced economy.
A massive one. So a company like Critical Metals, with a Western-aligned deposit in a stable location like Greenland, becomes incredibly valuable. They're offering a way out of that dependency.
And the market sees that. I mean, they've already pre-sold 75% of their future output.
Which is a huge de-risking event. For anyone listening, that's called an off-take agreement. It means they have guaranteed buyers in the U.S. and Europe before they've even dug a single pound of ore out of the ground.
It proves the demand isn't speculative. It's locked in.
Absolutely. Which brings us to their financials, because that's where you have to, connect the dots.
Right, because when you look at the numbers now, it's a bit jarring. This is still a very early-stage company.
It is.
Trailing 12-month revenue was only about $560,000. Now, that's a huge jump from the year before, but it's basically nothing.
They're pre-revenue at scale, absolutely. And they're burning cash. Net losses were sitting around, negative $51 million?
So as an investor, how do you get comfortable with that kind of cash burn?
You get comfortable because of how they've secured their future. They're not just relying on hope. They landed a major funding catalyst.
The U.S. Ex-Im Bank loan.
Exactly. $120 million. And the most important part of that is that it's non-dilutive funding.
Can you explain what that means? Why is that so crucial here?
It's crucial because it's a loan, not an equity sale. They don't have to issue a flood of new shares to raise that money, which would, dilute the value for everyone who already owns the stock.
So it gives them the capital they need to get to production without hurting their current shareholders.
It gives them the runway. It takes that immediate pressure off. They can focus on development.
So what's the timeline we should be watching? When does this story shift from a cash burn to cash generation?
The target year is 2026. That's when they're aiming for initial production from the Tanbreeze mine.
And all that capital is being plowed back into the project right now.
Every penny. Into more drilling, feasibility studies, and this is really important, into processing pilots. They just signed a term sheet for a new processing facility in Romania.
So they'll mine in Greenland and process in Romania. That seems intentional.
It's completely intentional. You're building an entire supply chain within a Western sphere of influence. Greenland is stable and Romania is in the EU and NATO. It insulates the whole process.
Okay, so let's look at how the market is reacting to all of this. The stock has been, incredibly volatile.
That's the nature of a junior miner. The 52-week range is something like $1 and change up to over $32.
Just wild swings. But the recent trend has been pretty bullish, hasn't it?
Very bullish. The stock surged, what was it, 17% on the very first day of trading this year?
And that's on top of a really strong run. Year to date, it's up over 34%, and over the last year, it's plus 54%.
And you can see that momentum really started to build after those 2024 drilling results came out. It seems like the market is finally starting to price in the quality of the asset itself.
So are the technical flashing any warning signs, or does this run have legs?
Well, the indicators are interesting. The RSI, the Relative Strength Index, is pretty neutral, sitting around 48.
Which means it's not overbought. There's still room to run.
Potentially, yes. It's not in that danger zone. And the longer-term momentum indicators like the MACD and the moving averages are actually quite bullish.
Where is the long-term support level sitting?
The 200-day moving average is around $5.80. The stock is comfortably above that, which suggests a solid floor has been built. It all kind of supports a potential breakout towards that $12 price target one analyst put out there.
Okay, so what are the catalysts? What are the news items that could actually push it there in the near term?
Well, the big one for Q1 2026 is the finalization of those last 25% offtake agreements.
Locking in that last piece of the puzzle.
Exactly. It removes another layer of risk. Then you need to watch for concrete updates on that Romanian facility. Any news on construction starting or permits being secured would be huge.
And what about the institutional side of things? It seems like this isn't just a retail story.
Not at all. There's high institutional ownership, which is interesting given how volatile it is. But the real signal, for me, was who they added to their advisory board.
Rear Admiral Peter Stamatopoulos.
Yes. You don't bring in a top military logistician from the U.S. Navy unless you're sending a very specific message.
A message to Washington and to defense-focused funds.
Absolutely. It screams that this is being developed as critical national security infrastructure. It's not just a mine anymore.
And that plays into the more speculative rumors we've been hearing.
Right. The idea that the U.S. government might take a direct equity stake in the project.
To guarantee that supply line.
Exactly. Now, that's just a rumor, but if something like that were to happen, it would be an incredible catalyst.
Okay, that's a lot of upside. We have to look at the other side, though. What's the bear case here? What could go wrong?
Execution risk. That's number one. It's still an early-stage company with negative cash flow, and they're trying to build a massive, complex project in the Arctic.
Greenland is not an easy place to work.
It's one of the toughest. You have permitting challenges, logistical nightmares, weather delays, and the stock itself is just very volatile. The beta is 1.36.
Meaning it moves about 36% more than the overall market, up or down.
Right. And liquidity is low, so it can be hard to get in or out of a large position quickly.
So how are those risks being mitigated? If there is a delay and that 2026 timeline slips, doesn't the stock just collapse?
It could get hit hard, for sure. But that's where the non-dilutive funding and the 75% offtake agreement provide a real buffer. They're not completely exposed to the whims of the capital markets day-to-day.
So a lot of the bad news, the pre-revenue status, is already priced in.
I think so. It all comes down to execution. If they hit their milestones this year, the risk profile changes dramatically. If they miss them, the bears will be proven right.
So at the end of the day, it's a classic high-risk, high-reward profile.
It is, but with a unique geopolitical twist. The value here isn't just in the geology, it's in the geopolitical necessity. The EV sector, defense, wind energy, they all need what this company has.
The key takeaway, then, is to just watch the execution.
Watch the execution. Can they make that transition from a developer burning cash to a profitable producer by 2026? If they can pull that off, they don't just become a successful company, they fundamentally change the critical minerals landscape for the entire Western world.
A fascinating story to follow. If you want to keep up with the latest analysis and insights, make sure you subscribe to Investing Talk Podcast wherever you get your audio.